Accounting Enrichment Society, also known as AcES, is an interest organization of De La Salle University das Marinas under its accountancy departments. AcES, which is operated by BSA and BSM students, is here to assist their fellow students from the same accountancy and management accounting programs with their studies, mainly their accounting-related lessons. The students are given enrichment classes they could attend to, and extra lectures, tutorial sessions, and learning materials which may all help them understand accounting concepts easily. This academic year, AcES is stepping it up by creating YouTube tutorial videos about accounting concepts. Fun, interactive, enlightening, and broadening. AcES YouTube videos are surely not just another extra lecture and tutorial session, but also a fun and interactive way of learning.
Welcome to AcES tutorial video sessions.
I'm Leah Buenaventura.
And I am Eirene P. Del Monte.
And I'm Julia Marie P. Carino, and we will be your tutors for today's session. So for today's video, we will be discussing the accounting cycle, which is the last video of the first batch for the introduction to accounting. So if you haven't watched the previous videos, be sure to browse our channel and look for the playlist Introduction to Accounting. I'm certain that these videos will help you understand the topic for today. So, before we start, let's have a short refresher about the previous topics.
To recap, we all know that accounting is the language of the business, and it serves as a service function which is to provide a systematic and detailed recording of financial transactions. There are three common forms of business operations. First, sole proprietorship, wherein there is only one owner. And second, partnership with two or more partners. And lastly, corporation, with shareholders as its owner. Also, there are three types of business operation. Service, where rendering service generates revenue. Second, merchandising. We all know this as buy and sell. And lastly, the manufacturing, where raw materials are converted into finished products. As for the accounts, we all know that assets have a resource value, whereas the liabilities is the business financial obligation. Equity refers to the owner's residual interest, and revenue, which is the cash inflow of a business, whereas the expenses is the cash outflow of a business. For their normal balances, always keep in mind that assets will always have a debit balance, whereas the liabilities and equity will always have a credit balance. Remember, capital and retained earnings make up the equity.
Now that you're done hearing the overview of the lesson, why don't we discuss it as creatively as possible, shall we? The accounting cycle is a standard procedure that every business does to collect, identify, analyze, and record business transactions or accounting events of the company. In short, every money that enters and leaves the company is being monitored through the accounting cycle. But what for? Why are we going through all that hassle? So one of the obvious reasons is to keep our business organized, right? But one of the main objectives of the accounting cycle is to ensure that all the finances within an accounting period are recorded and reflected in the financial statements. So the accounting cycle has 8 significant steps, and let's go through it one step at a time. For you to easily visualize it, imagine that you are a mini grocery owner. So name it whatever you want. You are the owner of this grocery. So now let's move on to the first step of the accounting cycle, which is the identifying and analyzing of transactions. So what are these transactions? They may include asset acquisition, debt payments, sales revenue, expenses, and even borrowings. So, in our case, since you are the owner of a mini grocery store, some of the frequent transactions that you may encounter is when you buy inventory for your grocery store. So that would include an asset acquisition because you gained an inventory, and that was also include an expense because you paid for something. And another example is when you pay for utility, or for example electricity. So that would include expense transaction because you paid for the utility. Okay, so now let's move on to the second step in the accounting cycle, which is recording the transactions in a journal. So let's remember that the purpose of the accounting cycle is to keep a record of all our financial transactions. So of course, if you want to keep that, we have to record them. We have to have a document that will contain all of the transactions that we have. And one of those documents is the journal. So this is now the time where you will put into the books those transactions that occurred so that you will not miss out anything. And you'll record what came in and what came out of your grocery store. For the third step, you will now transfer your journal entries to the general ledgers. So what is the difference between a journal entry and a general ledger? So in journal entries, it is just enumeration of your transactions that occurs on a date basis. So if what happens today, you'll record it. What happens tomorrow, you'll record it. But in a general ledger, it is now the compilation of an accounting item. So for example, cash. All your cash transactions within a year or an accounting period will all be enlisted in that general ledger. So it will be compiled. It will not be scattered, unlike in the journal entries. Okay? So once you're able to do that, just remember to be careful with moving the amounts of the accounting items, because once you transpose erroneous account, that will make your accounting also incorrect. Okay, for the fourth step, you will now formulate an unadjusted trial balance. So remember, in the general ledger, we will able to compile them. Every journal ledger will give us the balance of an accounting item. So for example, in inventory, the general ledger will give us the balance of the inventory, if how much inventory does we only have for that accounting period. Okay, so now that we have those balances, we can now make an unadjusted trial balance. So what is a trial balance? It is a worksheet with the list of all the general ledger account or accounting items, or a charts of account wherein the debit and the credit side should match each other. So in transposing the data from the general ledger to the trial balance, remember that if the balance of an accounting item is, for example, it is in the credit side, when you transpose it to the trial balance, it will also remain in the credit side. So even though the normal balance should be in the debit side, if the balance that showed in the general ledger is in the credit, you must obtain that position and just transfer that to the trial balance. Okay?
For the fifth step, analyze the accounts and prepare the adjusting journal entries. So adjusting entries are journal entries that are used to update and correct the amount of the accounts to ensure that the financial statements are fairly presented. So to learn more and understand more about adjusting entries, we will be uploading a tutorial video about that. So for now, an example for adjusting entries would be a The accrued expenses were the employees of the grocery store would be paid at the end of the month, which fell on a Wednesday, but you usually pay them on a Friday. So from this, you will adjust the salary expense you incurred that you have not yet paid. So the sixth step is similar to the fourth step. However, in this step, you will be preparing the adjusted trial balance. Here, you would use the adjusting entries you prepared in the previous step. So in this step, you may use a 10-column worksheet to perform the overall analysis of the accounts. Remember that the 10-column worksheet is not a financial statement, but rather is only used as a guide. The seventh step is to prepare the financial statements. As you all know, there are three financial statements that are commonly used in the business. First is the balance sheet or the statement of financial position. Next is the income statement. And lastly, the cash flow statement. If you have used a 10-column worksheet, you can easily locate the amounts and the accounts that are included for each specific financial statement. The eighth step would be to prepare the closing entries and posting the said entries in the general ledger. In this step, you would close the nominal accounts, specifically the revenue and expenses, and show the net income or the net loss. Once you have closed the books, no more financial transactions should be recorded as the reporting period is closed. For the last step of the accounting cycle, you will be preparing the post-closing trial balance. The amounts for the real accounts, specifically the assets, the liabilities, and equity, will be carried forward in the beginning of the new reporting period. And congratulations, you have now completed all the steps in the accounting cycle. But do not worry, as this is just an introduction to accounting. Expect to see more videos with contents that are more comprehensive in terms of the accounting cycle.
To sum it up, the accounting cycle is a collective process of every business that identifies, analyzes, and records accounting events. Then, we have 8 steps of the accounting cycle. The first step is to identify and analyze the transaction. Don't forget that this transaction should be a financial transaction. The second step is to record the transaction in a journal. In short, you will create journal entries for all the financial transactions you identified from the first step. The third step, posting to the general ledger. This general ledger is a summary of all transactions to individual accounts. The fourth step is an adjusted trial balance, wherein it ensures that the total debits are equal to the total credits in the financial record, vice versa. Next, the fifth step is adjusting journal entries. It should always be at the end of the period. One good example of it is the interest expense that has been incurred that has not yet been paid. The sixth step is adjusting entries, where all the accounts for accruals and deferral must be posted. 7 steps are preparing financial statements. These are the cash flow, balance sheet, and income statement. And then, the last step is closing the book, which means that all nominal accounts are closed and zero out for the next accounting cycle.
After the discussion, are you ready for a game to test your understanding of the lesson? How about we play Guess the Step? This game has an easy mechanics. Questions will appear on the screen and you have 5 seconds to guess what accounting cycle step was being described. Just say the step number. So for example, this step is where you identify transaction. So your answer must be step 1. After the 5-second countdown, the answers will be revealed automatically. So as simple as that, and let's begin. Yay! We're done. How was it? Feel free to comment down below your scores.
Make sure to subscribe, like, and turn on your bell button so that you will be notified of every upload. Stay tuned because we will release more exciting topics that are beneficial to you, future accountants. Now that we are done discussing the accounting cycle, in the next video, we will discuss the inventories of the merchandising. In the next video, we will go deep into that topic together with your next batch of tutors.
Kamusta mga ka-ACES? Nag-enjoy ba kayo and may natutunan ba kayo? Comment down below your experience in studying with us, and you can also comment your questions na agad din naman namin sasagutin. Muli, kami ang Accounting and Enrichment Society. Don't forget to click the subscription button and the notification bell below para update kayo sa mga next videos na aming pang ilo-launch. Or you can also like our Facebook page and follow us on Instagram for more updates.